This will also lead us into sector spotlight, but I wanted to get your take. Do we need to kind of watch tech as sort of the leader here? Because it seems like tech is the first to go.
Yeah, well, tech made new highs first. If you look at the Qs versus where I just showed you the S&Ps, you'll see it right now is above. We're trying to stay above the recent highs here, so that's showing relative strength.
Which is so weird because it's a seasonally slow period. So you have to wonder if people are trying to buy before the fall, or it's just doing well. The sector's just doing well.
The earnings coming out of tech are really good, especially like Apple, Amazon, some, even Intel was decent, Microsoft was okay. So you have your haves and have-nots, but right now seasonality isn't playing a toll on tech. Right now tech is still leading, but if you see tech, the leadership start breaking down, then that gives you some more flags and that makes you get out of some more of your stocks.
So then you can so leading into sector spotlight, then what you mentioned, the Googles and the Apples, you can still look at those stocks to lead tech higher versus say the Cisco's and Junipers dragging tech down.
Well, the Cisco has been a non-event for, I would say, almost 2 or 3 quarters. It's like $17, $18. Juniper was a bit of a surprise. People thought that Juniper was stealing Cisco's lunch, but now that Juniper wasn't so good, they're trying to maybe say it's a sector slowdown, which could put some pressure on tech because people didn't think it was an overall sector. They thought it might have been Cisco being too big to maneuver, so we need to watch how that plays out.
So we're still trying to figure out which one's going to win.
Exactly.
the good or bad tech losers and winners. Okay, so let's go to Apple then real quick, Scott, because it closed up more than 1% on Tuesday, over $400. More strength there for you in the chart?
Yeah, well, I've been trying to stay long Apple since it broke above that last pivot of 362. Came out with earnings. They gave you another entry around 392. Now at 404. I would take some off. I might look to even get flat today, as if you look at this chart, I know it can go higher this year, but if you look where it came from at 310, this was one entry, here's another entry, and now this was your earnings entry, and up at 404, it's getting too far extended from these moving averages, so I'd rather, as a trader, get flat, and then look for a better setup to get back involved. If you're an investor and you've been owning it for the past few years, just stay with it. You can handle this little down move if we get one, because Apple, to me, will be a lot higher this year.
Would it be the same strategy with Google then? Because it's had such a nice run up, 0.5% yesterday.
Well, Google, on a year-over-year basis hasn't really done much. Google finally got some of its mojo back with the earnings. I liked it earlier in the year and it didn't act well. Now it's acting much better. I think investors can stay with this one. As a trader, it's a bit extended. It's coming back to those old highs. So don't just jump in ahead of all of this adversity. But Google is one of the stocks I think you could own going into year end. It should be higher.
And what about Baidu, up another 5% yesterday? Pretty big move. Is it time to put in some shorts or anything like that? And the reason why I ask is because I read that it had a big decrease in short interest over the last couple weeks by something like 20%. So I wonder if a lot of this up move is technical trading, and did you have to reposition yourself?
It's a little bit of both. Baidu went all the way down to the 200-day, so it was showing relative weakness when the market pulled in. So people didn't think it would just blast off back to highs and go through new highs. So the reason why it happened so quick was because you had so many shorts, but the earnings were good. Like yesterday, I tried to short it a bit to see if it would sell down and give you an exhaustion gap, but it didn't. If you look at the chart of Baidu, you will see, you do have a doji, which is what we call a little bit of indecision up here after the earnings, but look where it came from. This was one entry we talked about. We talked about this entry. This was that flag consolidation to go again. Right now, I'd be selling some here because sometimes you do get a retest of the old highs, and that's where I'd rather you add in if you're not in Baidu already, not up here.
All right, we have 2 quick stocks we want to hit on here. Sohu finally had that update right up almost 4%. What do you want to do with Sohu today?
Sohu I would just avoid. We had this earlier in the year. I don't think it is as quality. I think it's just something that's a good trading vehicle as an investment. It's a little tricky during these tricky times.
I'm going to squeeze one more in here. Sina, though, hasn't really been performing. It was up 2% yesterday, but compared to the Baidu and the Sohus of the world. Would you have a trade here? I know I'm throwing this at you right now.
No, Sina we've been watching as a trader. It's been really good. It's just like Baidu. Baidu and Sina were hand in hand, but Sina didn't have numbers yet, so people are now expecting really big numbers out of Sina, so it could be risky taking it into earnings. I would make sure you have a good hedge strategy going into it. I will not be long that, even if it goes higher, into earnings.
And Netflix got hit pretty hard yesterday, down 5%. Do you want to start going long here? I mean, is it overdone a little bit?
Well, we talked about big support on Netflix yesterday. I said a lot of analysts were saying that this quarter was a little weak because they're trying to prepare for future growth. We talked about levels in Netflix, and that's why we don't take stock into earnings sometimes. We do in-the-money calls, so we have limited risk. But yes, it was a great opportunity for that cash flow trade. If you look here on Netflix, Netflix opened down. These were the 2 support levels. I talked about this one, which was right around 260, and then I drew this line. These are the lines from yesterday, was around 251. And it went a little lower, and then it had about a 8-9 point move off the lows, closing the highs. I think if it were to trade through yesterday's high of 268, it fills this gap, which is showing there are still believers in Netflix.
And that's when you can get back in then?
Well, I think yesterday some guys got in. As a
Okay.
trade today, it's maybe opening a little down. For cash flow, it goes through yesterday's highs. It'll squeeze more into that gap. It could be a nice quick trade.
All right, we will be back right after this with more stock picks for Wednesday.